Share to you how we can know when to buy a certain stock using the breakout or the breakthrough technique in the graph analysis. We can call this certain phenomenon a breakout because it looks like it destroys a certain barrier. But to be specific, we can call break up once it hits high and hits the ceiling, and we can call a breakdown once it hits the flooring and it breaks down. So it could be a breakdown or a breakup. So now, just for example, looking at the chart of Jollibee Foods Corporation, how could we know that there is a certain breakout or a breakdown in a certain period of time? For example, here in February 2016, if we can zoom in, during this range you can see a different patterns of going up and going down. So if you are to analyze this, it's like the movement goes up, down, and up, and it's like it's hitting a certain imaginary ceiling. It's like a ball that is bouncing and bouncing, and once it hits here, it has a tendency to sprout like a fountain, and it goes way above. So the reason for this is that during this time, there is a battle or a tension or a conflict, or we can call it different pulls, different directions of buyers and sellers. And during this point of time, the buyers outwin the sellers. So once it surpasses the resistance, we will have a phenomenon called a breakout or a breakup. It hits up the ceiling. So once the chart is going up and down, you have to wait at this certain period where it is approaching the ceiling, and then you can decide to buy on that period of time. But of course, certainly, no one really knows when will that happen. It could be that when you buy here, it will go down again and you lose money. Or it could be that once it breaks it here, it can go up, but it can also go down like this one. It went up, but it went down right away. So the hint that we have is that one of the best timing is to identify this breakup or the bouncing, right? For example, right here. So if you have seen these multiple bouncing points, you can be sure that if the time is right here, you can be sure that once it gets here, we can buy here. Of course, there's no 100% guarantee that it will really bounce. It could break down, or it can break up. So these are just a points of decision in certain ceiling or flooring in the charts. And for example, here in the present scenario, we have a minor bouncing. We have bouncing up, and we cannot see really high volatility in this point of time. Meaning the pricing are always, or even on the average, are not really changing much. But here, during these times, you can predict these phenomena. So again, breakout or breakup, breakdown, we can determine that by looking at the different points where the prices has bounced up. So for example, right here, you can see that there is a ceiling here and there's a flooring here. So the prediction, one of the prediction that we can have is if the price is here and it's going down, it will go down right here. And once it goes down here, we can decide to buy here. Or once if it is or if it will not break down, it may go down up to this point, and you can decide to buy at this point. But looking at this, the support system like this, the MANV, you can say that there is a strong support of the pricing right there. So again, thank you very much, and I hope I have made a little bit clear what it means to buy in a breakout or a breakup breakdown strategy. Thank you.